Can you believe it? We're already in the month of June, halfway through the year. Boy, a lot of changes have occurred in a great way. So let's jump into the Austin real estate market data and see what's happening. First, let's discuss these two bits of data. One is the number of active listings, the other is number of sales. So, what's important about this? If you look at the year of 2022 to 2024, you're going to see a consistent theme from January through May. We've had a continuation of increase in inventory, right? That's a message you've heard for a long time now. And you can see that just growing and growing and growing. Now, look at 25 to 26. You can see how in the last 2 months of April and May, we've had a reduction of number of new listings coming on or number of active listings on the market. That's incredible to see because that tells us a few things. One, that's good news for sellers because there's a little bit less competition. And that's also still good news for buyers because you still have a considerable amount of options to select from. So this doesn't tell us a huge story right now because this is just a little blip of data, but it's a little bit of good news. Now, with the number of sales, you'll see in the year of 24 to 25, we had this kind of thing going on where in January, we were able to sell a few more listings than normal in 25. However, through the rest of that February through May timeframe, you notice we're in the red. So we actually sold less. And 2025 was a difficult year. Now look at 26. January, we were still having fewer sales compared to the year before. And that was expected because we were coming out from the holiday season. Now look at from February down through April. You'll notice that we've increased the number of sales, which was phenomenal to see. That means more buyers are coming to the market. Now, this actually makes sense because interest rates were low at that point from January up to the Iran war and that global funness or whatever you want to call it came to play and interest rates jumped up. So rates were about 5.5 to 5.8%. And the data shows buyers like lower interest rates. Now, once the rates jumped after the war started, you can tell that, again, data is delayed, but we do see that this last month in May, there were fewer sold properties. And it's a good correlation. We can find lower interest rates, more people, higher interest rates, fewer people. Now, it doesn't mean interest rates are ridiculous right now. We're in that 6.5% range, attractive, and it's been that way prior all of last year, right? So we're used to this interest rate as of this moment. Now let's talk about factual data too through last year or last month. Average days to sell are 64 days. So about 2 months for a seller to find a buyer and then 30 days to close. New listings are at 5,153. Now, that's a little above average, but it's not higher than 2024, 2025. So that's good news, right? For sellers, because again, you don't have as much competition. And it's still good news for buyers because you still have a lot of listings to choose from. We're at 96% close price to original list price ratio. So I do want to say that this average of 96% we've seen since the year 2023. So to us right now, it's normal. However, when you look pre-pandemic, our normal is supposed to be 98%, meaning a seller would receive 98% of their asking price. That would be the normal way that we would expect. Right now, we're a little bit less. Okay. So that means it's still a buyer's market. The buyers still have negotiation power. The average list price is 689,000 and change. The average close price is 595,000. That correlates to the close price to original list price data, right? And then we also have 14,546 active listings and 3,106 sold listings above 20% mark. That's great news. So at 21% of inventory sold, it's the second month in a row that we've seen this. It has been a long time since we've seen that number. That is a great figure to be at. We want to be above the 20% mark of closed inventory each month. That is headed towards a healthy direction. That said, there are 7% fewer sold listings compared to a normal market. So even though we're going in the right direction, we're still not selling as many properties that we would expect in a normal market. We're also at 4.7 months of inventory. Again, that's a really great sign. We haven't exploded in inventory as we have years prior. Now, I'm also going to pivot. I want to talk about this because this does encompass what I just mentioned and expands on it. So in March and April, we did see that shift. People felt that the market was more favorable to sellers. And you may have read that on the news. When that's true because of the data that I just mentioned, but it's just a little blip, right? So we mentioned this is influenced by interest rates. We know that. And we also know that gave more confidence to buyers. So those buyers moved forward with purchasing March and April, and it helped increase sales about 10% compared to last year. And that is really great. Now, of course, this is encouraging, but it doesn't mean the market has recovered. We're still selling about 7% fewer homes compared to our normal market, and the values remain down compared to last year. So even though last year we had fewer sales and more inventory, we're still lower in value today. Now, in recent months, we already mentioned with this Iran war pushing back rates to the sixes, we'll see how that impacts us moving into summer. Now, the market is also a story of two different worlds right now. Some neighborhoods are performing well with selling in a reasonable amount of time, and certain areas and locations are very sought after. But parts like of Leander, for example, Santa Rita Ranch, you're taking a lot longer to sell, right? You have a lot more competition against new builds and resale, and you're noticing your value is reducing. Now, also, if you're looking at any kind of buyers who are seeing multiple offers on some listings, you're noticing that those listings are attractive because they're attractive floor plans, they have updated interiors, the pricing is attractive and feels fair. That you'll absolutely see competition. So that's why it's a difference of two markets right now. Now, for sellers, this is really great news because you have buyer activity. Buyer activity has improved compared to last year, so well-priced homes have a better chance of getting attention. But for buyers, the good news is that you still have many homes to choose from. It's still a buyer's market. Values are still down from the year prior, so you have more negotiation power. Now, let's go ahead and quickly recap on the seller's world. Again, there's good news coming out of the data, news that you've been seeking for a few years now. There is less inventory compared to 2025, but we're still above 2024. We already mentioned that the lower interest rates did help Q1 sales, and we're above 20% of homes closing. The sellers achieved 4% less in a list price, and of course, it's a buyer's market. So out of the 21% of homes closing each month, we know that it takes 64 days for you to find a buyer and 30 more days to close. As a buyer, we already mentioned the two different worlds. We do know it's a buyer's market, so you do have the upper hand. Inventory is still steady compared to 24 and 2025. And homes that are priced competitively are going quick. You've seen that. You've felt that from the spring into summer. Now, don't buy unless you plan to hold this property for 3+ years. And the luxury world is a whole different story right now. Anything above $1 million, you've noticed that in the month of May, it was the third strongest year in the history of Austin real estate with a number of closed units at 329. That's phenomenal, right? And most of the luxury listings are selling between 1 million to 2 million. Anything higher, 2.5 million plus, you're going to notice that days to sell are much longer, and you're noticing that there's a lot of competition and there's pressure on price. So if you have any questions, you're a past client, you're a future client, you're just curious about this information, feel free to reach out. We're always happy to help. All right, we'll see you next month.